Good morning, good morning, good morning, everybody. Thursday, August 3, just after 6 a.m. over on the East Coast there. And yeah, futures were very, very much down overnight. Nikkei, oof, rug pulled. FTSE, red for the year. Dropped down below the 2023 open. The DAX, having posted a new all-time high last week, again, down considerably, down 500, 300, 800 points over the course of the last couple of days. Dow Jones futures dropped considerably. So did the NASDAQ, so did the ES, and as well as the Russell. Here we are getting a nice big bounce, having come down to that 45, 12, 50 line over on the ES. NASDAQ, it's in a little bit of trouble, like we know. Russell 2000 down back below minus 20% from the all-time highs. And here you go over here on the YM, the Dow. Only down 43 points, down fractionally for the moment. And again, this is really because you have your hidden gem, your secret weapon reporting tonight, and that's Apple. And I actually went out there because I was trying to recall when it was. It was November 10th. November the 10th. This was the day that Apple had its largest gain in the history of its trading. I remember this, and it was absolutely fucking bizarre. November 10th was a day that we had CPI. We had CPI that day, and as you can see, we had a big gap up and then just kind of floated. But I remember this. I remember this quite visually. Apple went through the fucking roof on that day, November 10th. Dropped down lower, obviously, because it posted its lows back in January, but it was a big, big day over there for Apple. So we'll get over that in a little bit. November 10th, yeah. CPI day. CPI day. Plus 1% day. Now, yesterday, very nice. After a very long run, 18 days, we finally got our minus 1% trading session. We also closed below minus 1%, first time in 67 days. And we broke the bottom safe edge as they wouldn't buy the dip at the end of the day, as normally trained people would be doing, because you've been brainwashed for such a very long period that dips get bought. That's the way that it works. Dips get bought. Well, didn't work out yesterday, and that's where we are. Now, quickly, I'll bring you on here. On the ES, I'm tracking a basic concept idea as to where we're going to be bottoming out at. And as you can see here, we've got a nice AB, 1, 2, whichever you want to call it. And we are having a very strong no bounces, lower lows, lower highs move, still continuing, which should target right around 44.91 over on the futures, down about 30 more points, 35, 40 more points. And you can see how it comes right over here to this plateau that we had going back here. Don't have the specific date on this, but I'm pretty sure that this was right here coming into that middle of July period before we got our dip and our big bounce. So yeah, looking at that area there, that 44.91 on the futures, 45.28 where we are right now. So about 40 points lower, and that should be enough for us to get an oversold buy divergence on the bounce, and then we'll play it by ear when that comes out. Over here on the SPX, as you can see, 6.44% was our rally off of that July dip, the June bottom, sorry. That June dip, minus 2.7%, was the biggest dip that we have had since this rally began in mid-March off of that 38.08. So taking that into respect and into consideration as we dropped down 2% yesterday and right down to the April 21, 2022 highs, we have our COVID level. We have our two gaps that are unfilled here. We have 3% right in between those, and our 50% retracement, which unfortunately you can't see because it's overlapped, to this June dip bottom. So we should have a little bit more downside to come. However, you are taking a major risk expecting that to occur with Apple. Now, over here with AMD yesterday, and as you saw there in the weekend email, weekend video, discuss this. Forget about earnings, let them report, and then we go trade it. In your email yesterday, down at the bottom, showed the chart, showed you 115 is a lot easier. Yesterday in the alert room, like I said, posted it over there. 8:44 in the morning, AMD puts, you're looking at August 11 or August 18, 115s after the open. At 9:30 a.m., as soon as pricing sorted itself out, right at the open, caught the glimpse on it where the bid and the ask were right there, and they were $2 for those AMDs. Come over and see your result, and having got in there, executed your trade, you were up over 300% yesterday, and you still have a week to go on these August 11 AMD 115 puts. Go back and look at your AMD. Nice drop down to this 107. I was looking around that 110 area, like I said before. We're on 30-day lows, looking here right down to the June lows at 105.50 and bring out to a wider view. And as you can see here, we're right at that support level at 110. So like AK, like I mentioned to you, you bought and held prior to joining the service AMD 100 puts for earnings. You don't play earnings ahead of earnings and hold the positions. You sell into the earnings, and then after earnings, you come out and play it because you don't have to guess. That's why you got this result over here and not the result of having a zero worthless position, having held a position through earnings. So 110, 107, very good support level there on AMD. We did everything that we needed to do. We're done with AMD. So come on over to the SPX again. SPX, right to the 20-day moving average, right to the minus 2% level. Again, over there on the ES, showing where the projected downside should come out to. We will be tracking it, but we have taken a lot of the meat off of the bone on this drop down. The VIX also giving a slight, tiny little warning signal about consistent stay, not about staying short in your already incredibly cheap, distanced out further than this week puts. But for those that are going to go out there and say, fuck this, I'm going to go buy puts. We're right up here at the 17 level where we failed, going back there into the beginning of July. We have 1, 2, 3, 4 gaps going back down to the weekend. And we've come right to this gap bottom right here from the end of May. Now, it doesn't take a rocket scientist to see that you've got an incredible inverted head and shoulders here. But again, with yesterday showing you that what that 1622 meant, came up to it overnight, dropped down below it, didn't fill the gap, held supportively, went right back to 1622 for the duration of the day. Broke up above it as we failed over there on the SPX, and here we are gapped up above 1622. This isn't the place to be cute and try and buy the dip. And you will notice that when you go over and look at the pricing on your options, that it's not what you were used to when you were trading this incredible 13, 1350, 14 VIX, where everything was incredibly cheap. QQQ. QQQ, nice drop. Almost filled this gap completely. Only a couple of pennies left. 50% retracement down to that June dip. Still have this big gap down below. Still have this secret message of this fake wick that we got prior to open one day. And we are still considerably off of the 23.6 retracement down to the March lows where that almost greater than 35-40% rally began. 2 gaps are up above. Those can be left alone for the moment. And again, you have Apple. I haven't thrown it on here, but I will. Load studies. Give me a second here. And yeah, there you go. We are not far off. Not far off from our 50-day moving average. 50-day moving average would take you right down there below 365, right around 365. That would very cleanly be a perfect gap fill, a extreme test on that 23.6, and it would provide you for an opportunity to take better advantage of those August 25 380 puts that we've traded twice and now riding with the under $5 entry that was alerted out twice last week. So what we're looking at today is Apple. And Apple, yes, Amazon, I'm not being disrespectful to you, but you're not Apple, okay? You're not. So this is where we're at with Apple. Apple has done nothing. Like I said, I'm not really drawn anything special onto Apple other than what it already is. Uh, yeah, leave it at that. Um, no, you know what? That one's better because I got my retracements. Give me a second. Give me a second. Yeah, you've come up and you've filled a gap, but you are still well above your support level that you need to be tested over here, back at your old all-time highs. You have your January all-time high from 2022 back here at 184.95. That 3 trillion line is not correct. And then you've got your 23.6 retracement down to your correction lows at 124. So there is a plausible significant amount of downside that can come on Apple. However, expecting it to occur from earnings is not a very good idea. On your earnings, very easy to get big spikes up, see how it recovers, but it's very clean and very obvious now. The noun AI no longer works. People are trying it, it's not working. So we're trading what's in front of us. And what we're looking at right now for me is like I showed you there, about another 40 points lower, call it 20 points below the overnight lows of 45.10 over there on the futures. Get down here to this 44.91. We should have some pretty clean buy divergences that are set up, and we should get a nice little signal to say, you know what, you had a nice run over there on your puts that you were riding. Why don't you want to consider taking some of them off? So I'll see you guys in the chat room, and I hope you have an amazing, incredible Thursday morning.